In question 1A, we need to do the expected cash collection schedule. So in this slide, it shows the schedule of expected cash collection from November to December. Cash collection come from previous account receivable and current month sale. For November, the total cash collection is 338,200, which consists of 83,200 from the October account receivable and 255,000 from the November sales. 355,000 including the 85,000 from November account receivable and the 270,000 from December sales. Overall, cash collection increased in December, showing that the company expects to receive more cash from customer. So why cash collections divided into previous month and current month sale? This is because not all the customer pay immediately. Some sales are collected from the following month based the company's credit collection policy. Slide is showing the merchandise purchases budget for November and December. We calculate the amount of inventory the company needs to purchase using the cost of goods sold, desired ending inventory, and the beginning inventory. For November, the merchandise purchases are 252,050 ringgit. For December, the purchases are on the 250,275 ringgit. Overall, this budget helps the company plan its inventory purchases and ensure there is enough stock to meet the customer demand. Why do we add the desired ending inventory and then subtract the beginning inventory? This is because we add the desired ending inventory because the company wants to keep enough stock for the next month. We subtract the beginning inventory because that inventory is already available, so it does not need to be purchased again. So next, this is slide presenting the cash budget for November and December. For November, the company start with a beginning cash balance of 22,200 after receiving the cash collection of 338,200 and total cash available is turned to 316,400. After paying for purchases and other expenses of 217,600,000, the ending cash balance is 142,800. In December, the beginning cash is turned to 142,800, which the ending cash from the November. After the adding cash collection of 355,000 ringgit, the total cash available becomes to 497,800,000 ringgit. After deducting the total cash payments of 270,450, the company ends in December with the 224 ringgit 350,000. Overall, the cash balance increases from November to December, showing that the company has the sufficient cash to cover its expenses and maintains a healthy cash positions.
Okay, for the next question, which is D, prepare budget income statement for November and December. So first, we will calculate cost of goods sale, which is sales multiply the percentage, which is 70 first, and then calculate gross profit, which is sale minus cost of goods sales, and then we will determine operating expense. After that, we will conclude total operating expense by depreciation expense plus other cash expense. And then we got the income, which is gross profit minus operating expense. So this is the result. And this is our budget income statement, which is for the margin. In November, we got 19,800 ringgit, and for December, we got 100,000 ringgit. And then for net operating income, in November, we got 56,000 and 61st 1,800,000. And for the last question, for the first question, prepare budget balance sheet for the end of December, which is in this sector. We will conclude by take ending cash balance, which is the cash, and we will plus account receivable, merchandise inventory, and PPE. So that's a total asset. And then we will calculate for the liabilities and stockholder equity, which is account payable plus common stock and plus retained earning, which is the answer for the total asset and total liability stockholder equity should be the same.
For question 2, Sarah and I will explain this part. For question A, the direct labor rate variance formula used is as the provided. To get the total active hours, 2000 plus 1400 equals 3400 hours. For the total active labor cost, the calculation is as provided in the slide with the answer 24,080. So to get the actual rate, 24,080 divided by 3,400, which is the total actual labor cost, divide by the total actual hours to get the answer, which is RM 7 ringgit point 08. Finally, to get the answer for the direct labor rate, the answer for the actual rate just now we subtract by the direct labor rate hours, which is 7, then multiply by the total active hours. So we get the answer RM 280, which is unfavorable. For question B, actual hours subtract standard hours multiplied by standard rate. So we get the answer RM 1400 and unfavorable because the actual clock exceeds the standard. For question C, direct material price variance, and the formula used is as follows. For iron, AP is RM2, SP is also RM2, and AQ purchase is 5,000. So we enter it into the formula, and the final answer for this is 0. We do it also same for the copper, and the same calculation with the IP value RM 3.10 ringgit and the SP value RM3. AQ purchase 2,200, and we get the answer RM 220. Already got the values for both, then add it, and then we get the answer, which is RM 220, unfavorable because the actual price is higher. For the last question, I will explain is related to the direct materials quantity variance divided into two, namely iron and copper. For this question, the formula used is as follows also. AQ used for iron is 3,900 and the SQ value is 4,000, with the answer for iron being negative RM 200 and favorable, and for copper AQ used is 2,600 and SQ 2,400 and equals RM 600 unfavorable. So the total NQV is the value of copper minus the value of iron, with the answer being RM 400 and unfavorable.
Okay, next we move to the question E, which is variable overhead expenditure variance. Alright, so the formula we use for this question is actual variable overhead minus actual hours multiplied by standard rate. Alright, so for actual variable overhead is 12,000 and actual hours is 3,400, and for the standard rate is 3 ringgit. So 12,000 minus 3,400 multiplied by 3, and the answer is 1,800 unfavorable. And for the question F, the question is variable overhead efficiency variance, and the formula we use for this question is actual hours minus standard hours and multiply by standard variable overhead rate.
So for the actual hours is 3,400 minus 3,200 and multiply by 3, and the answer of the question F is 600 unfavorable. Next question is question G, which is fixed overhead budget variance. So the formula we use for these questions is budget fixed overhead equal practical capacity multiplied by standard fixed overhead rate. So for practical capacity is 4,000 multiplied by standard fixed overhead rate is RM2. So equal 8,000. So for the calculate variance is fixed overhead budget variance equal actual fixed overhead minus budget fixed overhead. So for the actual fixed overhead is 8,800 minus budget fixed overhead is 8,000. So the answer is 800 unfavorable. Okay, next, the last question for the question 2 is fixed overhead volume variance. So the formula we use for these questions is budget fixed overhead minus fixed overhead applied. So the formula for fixed overhead applied is standard hours multiplied by standard fixed overhead rate. So for standard hours is 3,200 multiplied by RM2, and the answer is 3,400. And for the volume variance is 8,000 minus 3,400, and the answer is 1,600 unfavorable.